The world's largest silver engine just had its fuel lines cut by a cartel war, and the fallout is about to hit the COMEX vaults like a sledgehammer. While the headlines are focused on the death of El Mencho and the firebombing of Mexican highways, they are missing the math that actually matters. Mexico produces 1/4 of the entire planet's silver, and right now that supply is physically trapped behind cartel blockades. With only 88 million ounces left in registered inventory, and 500 million ounces of paper claims screaming for delivery, we are one transport insurance cancellation away from a total force majeure in the silver market. Today we are exposing why the Panuco massacre wasn't just a tragedy. It was the signal that the era of cheap Mexican silver is officially dead. Wednesday, February 25th, New York time. Drop your date in the comments below so I can see exactly where you're watching from. And if this kind of work is valuable to you, hit subscribe and drop the words George Williams in the comments. It genuinely helps more than you know. Because what is happening in Mexico right now is not a footnote. It is not background noise. It is the single most important geopolitical event unfolding in the silver market today, and the world is barely paying attention. Let's go back to Sunday, February 22nd. Mexican security forces killed Nemesio Oseguera Cervantes, better known as El Mencho, the leader of the Jalisco New Generation cartel, one of the most powerful and ruthless criminal organizations in the Western Hemisphere. For Mexico's government, President Claudia Sheinbaum called it a historic victory. And maybe it was. But for silver investors, for stackers, for anyone watching global supply chains, it lit a fuse. Within hours of El Mencho's death, retaliation spread like wildfire across multiple Mexican states. Vehicles were set on fire along major highways. Armed blockades shut down critical transport corridors. Cities like Guadalajara went eerily quiet as residents locked their doors and stayed indoors. This was not disorganized chaos. This was a demonstration, a deliberate, calculated show of power from a cartel that controls vast swaths of territory across Mexico's most mineral-rich regions. And here is what you need to understand. Those regions, Jalisco, Zacatecas, Durango, Sinaloa, they do not just produce drugs. They sit directly on top of some of the richest silver deposits on the face of this earth. The mines that feed global supply chains run straight through cartel country. And when those transport corridors go dark, the silver stops moving. This is not theoretical. On January 23rd, just weeks before the cartel violence exploded, 10 workers from Vizsla Silver's Panuco project in Concordia, Sinaloa, were abducted at gunpoint. Engineers, technical staff, security personnel, taken. The company had reportedly been paying monthly extortion demands of 200,000 pesos, roughly $11,000, to keep operating. Then suddenly the ransom jumped. 10 million pesos per worker, 100 million pesos total for their release. The demands were not met. 5 of those 10 workers are now confirmed dead. 4 suspects linked to the Los Chapitos cell of the Sinaloa cartel have been arrested. Vizsla Silver's share price collapsed 50% almost overnight. That is the reality on the ground in Mexico right now. And it goes beyond one company, one mine, one incident. COMEX, Mexico's Mining Industry Association, reported in its 2025 annual report that cartel-related incidents account for up to 5% of total operating costs and up to 7% in material losses across the sector. The industry spent over $105 million on private security in 2024 alone. Think about that for a moment. The world's largest silver producer is spending over $100 million a year just trying to keep its workers alive and its ore moving. Now, geologists and mining engineers are refusing to work in Mexico altogether, and it is becoming nearly impossible to get transportation insurance for silver shipments out of the country. You cannot run a mine without engineers. You cannot export silver without insurance. The supply chain is not just under pressure, it is beginning to fracture. Here is why this matters to the global silver market in a way that should make every investor sit up straight. Mexico produced 202.6 million ounces of silver in 2024. That is roughly 1/4 of all global silver production in a single year. China comes in second at around half that. No other nation is even close. The world's solar panels, electric vehicles, semiconductors, AI data centers, they all run on silver. And 1/4 of that silver comes out of a country that is currently experiencing a cartel war. The supply deficit story was already alarming before any of this happened. Global industrial demand for silver is now running at 650 to 700 million ounces per year. The mines produce roughly 820 million ounces annually. But when you factor in jewelry, investment demand, and everything else, the market has been in deficit for 5 consecutive years. 5 straight years where the world has consumed more silver than it has dug out of the ground. And now you are threatening the largest single source of mine supply on the planet. The COMEX numbers tell the story in the starkest possible terms. In 2020, registered silver inventories, that is the metal actually available for delivery against futures contracts, stood at 346 million ounces. Today, in February 2026, that number has collapsed to around 88 million ounces, a 75% drawdown in just 5 years. And right now, March 2026 open interest on COMEX sits at roughly 500 million ounces, against only 110 million ounces of registered silver. That is 5 paper claims for every single physical bar in the vault. 5. And the Mexico supply crisis is making it harder every week to replenish those inventories. In December 2025, delivery demand on COMEX hit levels that shocked the market. Roughly 47 to 48 million ounces were standing for delivery in just the first 4 trading days of the contract cycle. Historically, December deliveries ran 10 to 20 million ounces total. Participants are choosing physical metal over paper settlement at a rate this market has never seen before. The squeeze is not coming. It is already in motion. Silver already proved what it could do when supply gets tight and demand surges. On January 29, 2026, silver hit an all-time high of $121.64 an ounce. It had squeezed from under $50 to over $120, driven in part by a 30 million ounce order that could not be fulfilled on COMEX. Then came the crash. Within 3 days, silver fell 41% from its peak, its worst multi-day collapse on record. The trigger? The nomination of Kevin Warsh as Federal Reserve Chair, seen as a hawkish signal that strengthened the US dollar and hit all commodity prices. US Treasury Secretary Scott Bessent pointed to Chinese traders. Goldman Sachs pushed back, noting that many of the most violent moves occurred while Chinese futures markets were actually closed, pointing the finger squarely back at Western speculative flows. Today, silver is trading around $90.66 an ounce. It has clawed back significant ground from its post-ATH lows near $64. But the underlying story, the structural story, is only getting more complex and more compelling. What are the major banks saying right now? JP Morgan has raised its 2026 silver price average forecast to around $81 an ounce, more than double what silver averaged in 2025, driven by tight supply and relentless industrial demand. But JP Morgan also warned the market remains vulnerable to corrective pressure. Bank of America has a 2026 peak forecast around $65 on the downside, while Goldman Sachs has noted that tariff investigations under Section 232 could drain London's physical silver market and send prices surging. The Reuters analyst consensus median sits near $79.50 for the year, but none of those forecasts were built with this level of Mexican supply disruption fully priced in. The market is catching up in real time. The industrial demand side is not slowing down for any of this. Solar panels alone now consume 25 to 30% of global silver supply every single year. Next-generation solar architectures, TOPCon and HJT panels, are actually more silver-intensive than their predecessors, using up to twice as much silver per cell. Electric vehicle demand for silver surged an estimated 20% in 2025 alone. AI infrastructure, the data centers, the high-efficiency electrical components, the thermal management systems. They are quietly becoming a new and growing silver demand vector. The US government has officially listed silver as a critical mineral for strategic industries. That designation is not academic. It is an acknowledgement that a Mexico shock, the kind we are watching unfold right now, registers at the level of national security. So where does silver go from here? Let's look at both sides clearly. The bullish case is powerful. If Mexico's cartel violence persists, and history suggests it will, transport insurance will remain nearly unavailable, engineers will continue refusing assignments, and COMEX inventory replenishment will slow further. With 5 paper claims per physical bar already, any acceleration in delivery demand could trigger a shortage that makes January's price explosion look mild. Analysts who study these supply dynamics have pointed to $100 as the next logical target. And with silver currently at $90.66 and recovering, the momentum is quietly building. The Federal Reserve is expected to hold rates steady in March, with roughly 2 rate cuts priced in for later this year. A weaker dollar environment, which 2 rate cuts would likely deliver, historically supercharges silver prices. The bearish risks are real too, and you should understand them. If Kevin Warsh at the Fed proves more hawkish than markets expect, the dollar could strengthen again and beat silver back down. Speculative positioning in silver has become increasingly volatile. Some analysts are drawing uncomfortable comparisons to meme stock behavior, warning that price swings are no longer purely driven by fundamentals. And if Mexican mining operations adapt, if the government deploys military protection along key transport corridors, or if companies successfully reroute supply through alternate channels, the supply shock narrative could fade faster than bulls expect. But here is the part that keeps serious investors up at night. Mexico's relationship with silver is 500 years old. When Spanish explorers discovered the deposits in Zacatecas and Guanajuato in the 1500s, Mexican silver literally funded the Spanish Empire and became the world's first global reserve currency. The silver in these mountains is not just a commodity, it is a geological inheritance, and the cartels know it. Control over the mines means control over one of the most strategically valuable resources on the planet. That dynamic, wealth concentrated in the earth, power concentrated in the hands of those who control the roads and the routes, does not resolve quickly. It never has. Mining history in Mexico shows that disruption rarely arrives gradually. It arrives overnight, in the form of a blocked highway, a kidnapped contractor, a shutdown ordered for safety, and then, quietly, without headlines, global supply tightens. The world wakes up one morning and there is simply less silver available than the day before, and prices react the only way they can. What is unfolding in Mexico right now is not a temporary disruption. Every analyst and investor who has looked at this situation closely has said the same thing. The eruption of cartel warfare following El Mencho's death looks less like a bump in the road and more like a fundamental change in the investment landscape. The era of complacency, of investors chasing production growth in Mexico while quietly ignoring that they were operating in a narco-state, that era is almost certainly over. The question is not whether the silver supply chain is at risk. It clearly is. The question is how long it takes the market to fully price that risk in. And right now, at $90.66 an ounce, with COMEX inventories at all-time lows, with 5 paper claims per physical bar, with Mexico's cartels declaring war on the highways that move silver to the world, the market may still be underestimating what comes next. Pay attention to this story. The next move in silver will not be announced. It will not come with a warning. It will come the way these things always come, suddenly, violently, and before most people are ready. If you found this analysis valuable, share it with someone who needs to understand what is actually happening in the silver market right now. This is the story the mainstream financial media is not telling, and it matters more than almost anything else being discussed in precious metals today.